After some much-deserved time off, we're thrilled to have Danielle Shay, VP of Options, back with us from Simpler Trading. So good to see you.
So good to see you.
How was your time off?
It was amazing. Thank you so much.
Any fun stories? Where did you go? What did you see?
So I went to Seattle and I was staying in the San Juans. I went crabbing. I did a bunch of fireworks. It was amazing.
Wow. Great to have you back. Let's talk about the market. As we, try to get back to the upside here. We're still negative on the day, obviously, but a number of different things have happened, obviously, this week with the CPI. We can get into that in a sec. I want to talk about bank earnings here because JP Morgan, MS out this morning, both miss. If you traded it, how did that go? Obviously, we have to look ahead now. We have more tomorrow morning, more on Monday morning. What are you doing with the banks?
So looking at the banks, I was pretty bearish going into bank earnings just because of the fact that, the last two quarters, they were both pretty, JP Morgan and Morgan Stanley. You had Morgan Stanley trade higher, but then it just immediately fell, which is bearish. And then you had JP Morgan experience bigger moves than what we've experienced over the course of the past 8 quarters in the last 2 quarters. So I was bearish on both of those. Now that those have come out, that definitely puts a little bit more of a bearish tone on the market next week, in addition to the rest of bank earnings. So, I think it just makes sense to continue going on in the downtrend with XLF.
If you had to pick, maybe, obviously WFC, we get Goldman, we get Citigroup tomorrow morning. If you have to pick maybe one or two of those, which one are you going to focus on?
WFC has always been a little bit on the negative side. I would consider that to be more of a relative weakness name, even in the good times. So I would focus on that one a little bit more to the downside. Goldman Sachs is a really interesting case because Goldman Sachs had a lot of strength over the course of the past couple of years. So even though I like the banks to the downside, I'd probably be a little bit more cautious with that one. But you know what the thing about Goldman Sachs is that more people look at it. So what I would do with Goldman Sachs is I would wait until after earnings because there's probably going to be a big momentum move. And then I would jump on it at that point because of all the attention that it's going to get.
Banks kick things off as far as this earnings season is concerned, but we all know how much you love Tesla, Danielle. Let's talk about what's to come next week. Wednesday after the close, in fact, we get Tesla earnings. Elon, Twitter stuff aside, Elon has kind of given some hints, at least along the way through this quarter, that it may not be the greatest. What do you think here as far as Tesla is concerned?
So, I love Tesla on the long term. I think I've talked about Tesla all the time, but the problem is I don't think it's looking good for them this quarter at all. Whenever you have your CEO come out and, equate your factories to a literal dumpster fire, it's never a good thing, right? If you look at the way that Tesla traded on earnings last quarter, they had a fantastic earnings report. It traded up higher by 10% and it rolled over and it's been falling pretty much ever since, with the exception of a couple different short squeezes. So I think you have to be really careful when you're trying to short Tesla. I have been short Tesla the past couple weeks and it's been a little bit of a wild ride. I've been trying to target 600, but I've only gotten it down to 650 so far. I think that post earnings, we're going to see Tesla trade down to 600, but I'm going to use that as an excuse to pick up more long-term shares because the weakness isn't going to last forever.
Is there something maybe you need to see in the report or hear in the report or maybe hear from Elon himself that would turn that? As you said, it's been very negative over the past, 3 months at least. What do we need to hear? Is it that deliveries are coming? Is it that more production is coming? As you said, I think it was a furnace lighting money on fire is all of these gigafactories right now. So is there something that you're looking for?
So, the semiconductor shortage has been droning on for what seems like forever, but that is a really important factor because that is the number one factor that he noted. He said that, hey, we've got these factories, we've spent all this money, we don't have debt, but we can't make cars if we don't have semiconductors. So that's an issue. But what I'm also really interested to hear is, he was, I would argue, one of the first CEOs to come out and start to say, hey, you know what? I'm cutting the workforce. I see a downtrend. I'm planning ahead for this. And so I'm really interested to see how they've been managing that and what that's going to look like going forward, because I do think that he's been ahead of the game. And I do think that he's going to manage it well. So I think especially comparatively to other tech stocks, perhaps, they're going to be able to ride out the storm, but I want to hear about their plan for doing that.
All right, let's shift gears here a little bit. Talk about energy. Oil, I just double checked, $40 off its highs from March as of the lows today. Obviously a big bounce going into the close of the pit session here, but I mean, huge, wild, volatile swings over the past couple of days in the past week or so. In the energy sector, I mean, 100 seems to be a sticking point. That 95 to 100 range seems to be a sticking point. From an options standpoint, is there a trade here right now?
I mean, the thing about energy is energy was, of course, you know, the relative strength sector, and it was one of the main reasons why the S&P wasn't falling as hard as the NASDAQ all year, right? Because, I mean, you still had staples, you still had energy holding up. But the problem with energy right now is energy has shifted into a downtrend. I don't think that crude is going to just completely fall apart. I mean, it's been doing a really good job holding up, especially above the $90 price point. As long as crude can stay above 90, I think that it's fine to look for some trades in USO in particular. But if crude's going to break below 90, I think we can short it. You know, XLE has already broken down. Crude's holding up a little bit better. XLE is probably one of the only sectors I really haven't focused on to the short side. And now that it's falling apart, we're in a downtrend.
And which is a good lead in, I guess, to the overall economy here on the inflation trade. I mean, we got to get your take here for the overall market after that CPI number comes, you know, much hotter than expected. 9.1, a 40-year high. You know, we saw all the headlines going back a couple of days ago. 26 and 27 is going to be the next Fed decision. I mean, you've been banging the drum on the short side all year long. Do we continue at this point?
I think that we do, because I think that next week, just like what happened with JP Morgan and Morgan Stanley today, I think that we're just going to continue to see more bad news coming out from just a variety of different industry groups. I mean, yes, oil prices have come down. That's true. But when you look at the transportation costs that so many different companies and so many different sectors had to deal with last quarter, in addition to the supply chain shortages and Russia and Ukraine droning on, there's just so many issues. Then you have the rising dollar. I mean, I think that we're going to continue to see more bad news than good news. I think the one exception is just the fact that everyone is bearish and the put call is so high. There's no doubt in my mind there's going to be short squeeze days. Like, you know, yesterday we were seeing Tesla rallying $50. There's going to be days like that for sure, and we can look out for them when the market gaps up big on the open. But for the most part, I just want to focus on the downward trend, at least until we get through earnings and the next Fed decision.
Hey, Danielle, great to have you back, and thank you for coming. I know that we try to plan this every Thursday, but maybe any more vacations planned so our viewers can know maybe, you know, if you're going to be taking any more time off anytime soon?
Well, Sean, funny that you ask, because I'm actually pregnant. So
Congratulations.
Thank you. So you're going to have me for another, I don't know, 2-3 months, and I'll take a little bit of a break, but you have me until then.
Wow, congratulations. Yeah, you're glowing. So I guess that makes a lot of sense right there. That's awesome. Hey, well, maybe there's someone else that we could talk options with in your absence. That would be absolutely fantastic. We'll talk about that off the show. No one can replace you, obviously, right? So, all right, let's move on off that before I get in trouble. All right, one strategy. See, now all these jokers behind us are all like, yeah. Slow down, boys. Okay, quickly here. We just did a little bit of a thing on IBM and sort of where to run if there is a recession coming. I said that basically IBM is pretty dead stock over the last 10 years or so, but they do have that 5% dividend. So, you know, if you were to hide somewhere, I'm thinking about an IBM. Now, from an option side of things, if you are expecting sort of sideways movement, and I have the daily up here on IBM, we can go to the screen, maybe give you a chance to call it up for yourself if you wanted to, but you don't have very many moves here in IBM. I mean, you can go all the way back to October. I mean, even go back a year, and you're at the same price you're at now. If you go back to a year from now, back in July, look at this, 140 back in July, and today you're at 139. So what I was thinking about, what about riding options on a name like this? Because if it's a recession, you're like, you know what, I don't want to put anything into the underlying equity, but I don't mind collecting a little bit premiums as the market kind of figures itself out, because I don't feel like IBM's going anywhere. Is that something that maybe you suggest to some people that you trade with?
You know what? It's so funny that you bring up IBM because one of the traders on our team, Sam Shames, just 3 or 4 days ago, he said to me, you know what? My IBM strategy is going so great. He told me that he's been regularly just selling puts on IBM, picking up the shares, and then selling calls. So, number one, when you're selling the puts, you can sell puts, and since it doesn't really move that much, you're picking up some premium there. And then if you're selling them with the intention of picking up the stock, what that does is it gets you into the stock at a cheaper price. So you can A, sell puts to pick up the premium. B, you can sell puts to get into the stock at a cheaper price. Then once you have the stock, you can collect the dividends. And on top of that, once you have the stock, you can sell covered calls. So it's so funny that you picked that exact same name because I was just talking to one of my colleagues about that exact strategy on this ticker.
Yeah, no, it's one of those obvious ones. I feel like we talk about it all the time as far as, stocks that don't really move and where people are really looking to sort of pick up some premium and do something like that. So I do like IBM. Was there any other name that maybe fits in the same kind of realm as that? Or I don't mean to put you on the spot. If we can't think of one, maybe we'll get one next week because I don't think this recession talk's going anywhere. But was there another name similar to IBM if traders wanted to do something like that, but maybe on a different name that you can think of?
Yeah, of course. So I was actually just on CNBC an hour or so ago, and we were talking about Tractor Supply, United Healthcare. These two companies are a little bit different because they're trading higher versus just trading sideways. They don't have as much of a dividend, but what they do have is they have an increasing dividend. Plus, they have the fact that they've been really strong on earnings and they're continuing to trade higher. So when you're looking at not just being able to capture a dividend, you're also looking at trying to get into a name that is continuing to be strong in this market environment. So ideally, you can capitalize on not just the options, but you can also capitalize on the increase in the stock price.
Ms. Danielle Shay, VP of Options at Simpler Trading. Thank you so much for coming through one more time for us. And again, a big congratulations to you and your family. I mean, that's the best news anyone can receive. So good luck with everything. Thank you for coming on and thank you for talking options with us as well. And I'm sorry you mentioned that you're on another channel. I've never heard of that before. So good luck with that one. And we'll go on from there. So Ms. Danielle Shay, Simpler Trading, thank you so much.
Thank you.
Ciao.